Let's take a look at transportation costs. Whenever merchandise is involved, it needs to be shipped from the seller to the buyer's place of business. So who pays for transportation costs? Well, it depends on the shipping terms. Let's take a look at some terminology. Well, we've got the seller. The seller is the shipping point for the shipments. Then we've got the buyer. Typically, we're looking at it from the buyer's point of view. The buyer is the destination for the merchandise. And then there's a carrier who carries the goods from the shipping point to the destination. There are two shipping terms we're going to talk about. The first is called FOB shipping point. FOB, by the way, stands for free on board. That is not something that you need to know about, but it's just a trade term. It's called FOB shipping point. If the goods are shipped FOB shipping point, the seller is quoting you a price for delivering the goods to the common carrier. So the price that they quote is for delivering it to the carrier. The buyer is responsible for paying the shipping costs. Transportation costs are paid by the buyer. Also, the buyer owns the goods the minute they're placed on the truck or the carrier. If the goods are destroyed while they're in transit, the buyer bears the risk of loss. So the buyer already owns the goods, so if the goods are destroyed during shipment, the buyer bears the cost. Now let's look at the next term. The other one's called FOB destination. Where's the destination? The destination is the buyer's place of business. So if we are purchasing items, the seller will quote a price and that price will be the price to deliver it to our warehouse. In this case, the seller delivers it to our warehouse. The seller will take care of paying the shipping costs, and ownership passes the minute that it's delivered to the buyer's place of business. Again, let's assume that the goods are destroyed in transit. Who bears the loss? It would be the seller, because the seller this time is responsible for delivering the goods up to the buyer's warehouse, and until it's delivered to the warehouse, the seller has ownership of the goods. So in this case, the seller would be responsible for the loss of those goods. Now let's take a look at how we account for the transportation costs. How it's accounted depends on the shipping terms. If the shipping terms are FOB shipping point, then the buyer has to pay for the shipping costs, and the cost of the freight is added to the cost of the inventory. So we are going to be debiting our inventory account for the cost of the freight. If the shipping terms are FOB destination, then the seller pays for the shipping cost, and if you're the seller, then you're going to treat them as a regular expense. So we're going to call it delivery expense. For this particular section, we're dealing with purchases. So the thing to remember is that the cost of freight increases the cost of merchandise inventory. So you're going to increase the cost of merchandise inventory with how much freight you paid to bring it into your place of business. Let's take a look at an example. Say on 1/1, ABC Company purchases 100 widgets at a cost of $50 per widget. Terms are FOB shipping point. They don't say it's on credit, so we'll assume that it's cash purchase. Then on 1/1, ABC Company pays $150 to UPS for shipping charges. Let's see how we would record this transaction. For the first one, for the purchase of inventory, you know that you paid $5,000, $100 per widget times $50, so $5,000 in total. You know that you're going to debit your inventory account for $5,000 and you're going to credit cash for $5,000. Now, for the second transaction, we pay $150 for shipping charges. Well, what do we do here? We know that we paid cash, so cash will be credited, and we know that inventory cost went up. So we're going to debit inventory $150 for shipping charges, and we're going to credit cash $150 for shipping charges. Again, remember, freight is added to the cost of inventory. Does that make sense? Well, let's take a look at another example. Let's say that you decide to buy a book from Amazon for $10. Amazon charges you $5 to deliver the book to you. What is the cost of your book? It's $15, right? 10 plus 5 to deliver, it's costing you $15. In the same way, our merchandise is $5,000. We had to pay $150 to have it delivered to us. So our merchandise, the cost of our merchandise is $5,150.